Good day, ladies and gentlemen. Welcome to Plan B Express. And of course, I told you if you are in our community and simple trading strategy, Felix Parss strategy. That's price actions, resistance, and support strategy to trade. Not complicated. Advance of it will now go into more of external trading strategy pattern and all of those things put together. Now, in the previous one, I was explaining about the trading pattern and what you need to look at in taking market. And now, so this one, and I want to give you an idea about the two major indicators probably you want to add to support your bias in trading, especially if you're a day trader, a scalper, and there are two major ones. So first is the oscillator indicator, which is the MACD. And then now listen, please, when you're using all of these things, you are not using them as a replacement of price action. You are using them to just help you to support your bias. Now, the next one is the trend indicator, which is going to be 10-in-1 moving averages. So these are the two major indicators you're going to need. Now, over time, you probably will need more support indicator, but if you want to have more supportive indicator, now TradingView wouldn't allow you to have more than two as a free user. So you can have to subscribe maybe for basic, and that's going to help you. Especially if you want to be part of those people that will have access to some of the scanner I set up and combine on my TradingView. And if you're on Capitalxtend, once you fund your account on Capitalxtend above $500 or $1,000, you can have access to some of this scanner that's going to help you to trade, or if you're a scalper. But if you are not a scalper, you don't need some of those scanner to that extent, to be very candid, because you should be able to purely trade on price action, as it were, if you are a disciplined trader. Okay, so now I've added these two indicators. Now, if you want to trade this indicator just nakedly like that, you can do that, all right? But definitely, you need to understand price action as much as possible. So there are a few things I'm not going to go to detail of explanation about the MACD, but I've done a lot of videos to explain what the MACD is all about and what to use it for. One of the most important aspects you have to look at in the MACD, beyond just using it to trade, is to learn to pick divergence, just like RSI, to see divergence. So now quickly, let's go. I edit my own settings into the MACD of what's it called, MT5. So I quickly go to style, and I'm taking away the histogram. Okay, when I take away the histogram, okay, so then sometimes you'll have to go, is it not the histogram that matters so much? Now I explained to you some of those things most people use the histogram for. For instance, if I do like this, all right, they use it for different things and all of that. Okay, so that to be able to trade, see the market is seriously bearish, bullish as much as possible on the time frame you're actually using it for. So but we're going to go back to it now and do the setting back. So I'm enabling this one and then enabling all of this back. All right. So here I'm going to change this guy to columns. All right. And I change the color, perhaps, of course, to this lighter stuff. And then I remove this histogram. Okay. And then I click OK. You get it? Very, very simple. Here, changing nothing. Okay. Now, so since this one is done, very fantastic, then I'm going to go to the trend indicator, and then I need two eventually when you have time, over time when you want to use them. So you're going to need two, perhaps. But for me, as a scalper, if you want to be a scalper or day trader, you're going to need only 50 moving average. So, okay, now look at this. I'm going to take this one to a very thick one, and then this one, just leave it as it is. Okay, now do I actually need the two? You don't, because as a scalper, you don't. What you need is the 50 moving average. Okay, so I need to return back to it. Let's go here. So pay attention, please. I'm going very fast so that we can cover some things in no distant time. So I'm going to change this one to 50. Okay, so 50 moving average. That's the major one you actually need for the Felix Parss strategy, is to be able to actually be profitable and less stressful. Okay, so this is it. 50 moving average. Let's get okay. Oh, here. Let's go. All right. So this is 50 moving average EMA, and then you have the 200. And I said, if you don't want to dirty your screen so much, you can disable the 200 moving average just to have only the 50. And I'm going to show you how you go about it. Okay, now let's go. If you look at your market now, price action, we traded this, we showed the buy of it here. Now, if you look at it, you want to see the trend of the market. So it's an uptrend, okay? It's an uptrend. So this is just like a normal pullback that has happened. It's an uptrend, right? You already seen. Perhaps the MACD too, this is like a pullback, and MACD is above zero level, it's an uptrend. Okay, so to understand that is an uptrend. It gives you an idea to know that are we in uptrend or downtrend. So it's an uptrend. Now, so let's go back to 1 hour, and I'm going to tell you, when you are trading with 5 minute time frame, more or less like a scalper and all of that. So go to 1 hour. Then this trade has actually given profit when we come in, but it got rejected at this point. I was explaining about if you have not watched the video, and you are not on our group, if you are not on Capitalxtend trading with us, there is a need for you to go and see how to trade with us. You to register with the link on the comment sections, fund your account, and then get to be part of it. You have access to free signals, you have access to different things. Look at this now. So look at this now. So we have access to all of these functions. So, okay, how to create and fund Capitalxtend with Trading Mastery, broker, how to connect your MT5 and all of that. Then trading view setup, navigation, understanding MACD, RSI, and even 50 moving average. So many I've explained this here, right? So if you look at it, I've explained it here. Understanding past, all right? Past simple trading strategy, okay? Your daily trading routine, bonus video on daily trading routine, then past strategy and all of that. So if you look at it, if I click here, you're going to see that I've explained about. I've explained about all of this strategy. If you click here, you're going to see that I've explained about all of this concept. And so, but one thing I see is that most time we don't have time. Okay. So now that I've done how to navigate your trading view, set your watch, okay, so I've explained all of this, so I'm not going to those details. If you want to have access to that, so you know what to do. Sign up on our Capitalxtend link, fund your account, and then you have access to some of those informations you're actually listening to right now. So let's go quickly. Now, so you can see the MACD. How do I use it? Okay, so now, but for instance, before you actually use it, you want to look at the market activities first and see how the market is going, okay? Now, the market, are we in uptrend or downtrend? If you have checked it, it's an uptrend, but temporarily we are pushing down, right? Temporarily. But if you look at it overall, even if you look at it on 1 hour, you know that this is an uptrend, but we have broken this. And so can we push back again? But if you go to 4 hours, you're going to see something very far. So if you go to 4 hours, all right. You go to 4 hours, you're going to see this is a low, this is a high, this is a low, this is a high, this is a low. Okay, now this now is no longer valid. So we have a low here and straight up here. Right? Straight up here, and this is a low. Here, no. This is higher, this. So this is not another low. So this one does have come to create internal liquidity. But look at it, market got rejected. Already here, can we move up here? So I'm not going to do settings, check Fibonacci retracement level and all of that. I just want to use your MACD that you're practically trading with. Now, so using your MACD, you can trade with 15 minutes or 1 hour, 15 minutes or 5 minutes as it were. Now, if you look at on your 15 minutes, it's getting rejected on MACD, perhaps, right? Then, so what do you do when the market is below 50 moving average? You want to be looking for a buy, a sell. If it's above 50 moving average, you want to be looking for a buy, right? So then if you look at it here, now, one of the lovely aspects of the 50 moving average is this. Of course, you need to understand your market structure. That's one of the fundamental things first. Now, when the market crosses the 50 moving average and give you a bullish sign to buy, you bought. Now, you trade up. Now, the best time again to buy is a pullback to the 50 moving average. Now, there will be a time abnormal pullback and come below 50 moving average. But was it really giving a very massive actions? No. Look at your MACD. Your MACD, when it crosses, it was just minus a little, and then moving sideways to an extent that you want to find. So that means if I actually want to enter this, I will have entered before now. So this is 15-minute time frame, right? So, but look at it. The market here, this is the thing I teach. Because of Felix Parss strategy, you understand that the market had gotten to this key level, this weekly key level, ladies and gentlemen. And now, at this point, this is a high, and this is a low, this is a high. Fantastically, if this is a high and this is a low, this is a high, this is a low. So what you do is that we said every time you go to a particular swing low or swing high, it's a potential resistance. So that means when the market got here, it's a resistance. And even at the key level, the market pull back, you want the market to return back to that point. Listen, every time, though there are abnormal cases where the market may not return back to that place you're expecting it to return to, understand that there are exceptional cases, there are abnormal cases that it happens that way, right? So, but what you want to do is that you have, now this is it. Look at this market. This is a resistance, this is a resistance, right? This is a resistance. Now, but you are using 50 moving average, the market is still above it. When you return back here, you are looking for a buy. And of course, the MACD is still above the zero line. Now, the market come back here. MACD is already showing a kind of moving down, right? A bearish move. But the market is still showing a bullish move. So here, the market come over here, got rejected. You mark it that the market need to push back to it. Now listen, three things, and I'll keep explaining this. Three things happens when the market return back to that zone. Number one, get rejected smartly and create a double top. Get rejected before that, that's a failed rally, and create a higher low, a lower high. Break out above it and return back to it. That's a sweep of liquidity, or what you call fake out traditionally. So any of these that happen, you want to pay attention to so that you can maximize your trade. Good. The market have done that. And then you need to mark both here and here out. Now, if you look at it, marking this point out is now aligning with even your 50 moving average. Now, listen, the market had crossed over here. Now, most sniper traders, what do? As the market has swept the liquidity and returned, look at an engulfing candle. The close of this engulfing, they enter. That's some snapper entry trader. Now, and then they take their stop loss above this. But conservatively, most traders want to see that the market actually broke down, right? That sweep, that is change of character or market structure shift. Okay, so as change the character and return. So the return, normally the return is supposed to return back to, is there any imbalance in the market? And probably if there are imbalance in the market, if you could look at all the analysis I'm doing now, it's more or less, I need no indicator. You know that. You don't need it. But now look at what the indicator probably will give you. It's like a morale. Look at it. The indicator give you morale. Look at it. So let's go here. Okay. So now for the fact that the market got to, okay, let's take it down. Fantastic. For the fact that market got to the resistance point and broke down, you are waiting for a reverse up to this point, get rejected. So perhaps this is the main high. So if you mark it the way I used to mark my trade, and this is what I do. The wick, the high to the wick of the candle is stretched out. Okay. So the market actually gets and sweep the high, which is the sweep of liquidity. And look at it. That was massive. Two candle, what sometimes can be one candle and then drastically drag down, then two candles, and then one massive engulfing candle, almost engulfing the two. Now, that's a cool one. But more conservative trader, what do you know what they're looking for? So some traders, after this engulfing, they find a snapper entry and take their stop loss here. Conservative trader, yet even looking for snapper entry, but more safer, right? More safer and much assurance that it's going to go well. So they look at it. The market pushed down massively and create a fair value gap. That's a very fantastic one. And quickly sweep this down. That's a change of character or market structure shift. Now it has shifted. Now, so this thing can be tempting, seriously. You will say the market has left you behind. Now, sometimes, if it's not a news period on the normal market structure movement and all of that, we check this now, especially when it's a keystone, right? A key zone, like London key zone, New York key zone, and all of that. If you check this, this is London key zone, if I'm not mistaken. It was around London session. Then the market has pushed back. Look at a massive move. Sometimes when the massive move is more than about 50 pips or 70 pips, it may not return back to the origin, perhaps, and it will just pull back and continue. But in this case, even if I think this is a similar thing that happened to GBP, JPY that told people to buy or to sell, when the market returned back there. Look at what the market did. Very manipulative. Look at it. The market came down over here, but could not mitigate the FEG. Traveled down to this point, and we have a massive move back up. And this is the way I enter my trade. I'm not supposed to be teaching this again. I'm just supposed to teach you moving average and all of that. But it's not about indicator. It's more than indicator. It's about trading and be profitable. And those are the things. Now, I entered my market probably with 50% this way. So I did say 1, 2, 3. Then my stop loss is this. Look at my stop loss. If you can focus on this, so either of the three, all of them, my stop loss is here. Look at it. Look at my stop loss here. Now, my stop loss is above this candle. But as a conservative trader that I am, I pick it above this swing high. How many pips? Just 11 pips, guys. Yeah, you heard me right. You know this Euro USD. 11 pips. Okay. 1:2 risk reward. Let's go, guys. See, now at the swing low, at this low, it's already 1:2 risk reward. Now you have 3 positions open. 3 positions, ladies and gentlemen. You have 3 positions open. What do? One is going to be to take profit at this swing low, and the other one is to trail the market down, okay, to whatever it's going to. Now, look at what happened. You may be scared when the market again, excuse me, sorry. You could be scared when the market again, in turn, return back here. But look at it, got rejected at this low. Now, see, oh my God. Trading is simple, but it's not easy. Okay? Trading is simple, but it's not easy. You know why? We too cannot be simple enough to learn. And those things that will make us to win, they are too common for our liking. Okay, so this is it. So this market has come back in. Now look at the consonants here. The market, of course, already below 50 moving average. No, it come back here, massive action here. Maybe it's a news that induced it back on this one. Who knows? Or another market system, because maybe New York or something. Yes, because it's like New York open somewhere here, and then NYC, that is the New York stock market. Then massive pump back. Just be in charge. And that's why trading, if you trade too many instruments at a time, you may not be able to control this thing. All right? So now, let's go. The market has done what it's going to do. So even on 15 minutes, so you continue to stack more position when it pull back, and then take another entry, pull back, take another entry, pull back, take another entry. You can see now. So all this below 50 moving average. Now we're having a case study. Now, the same way, you go to 5 minutes. Let's go. You're a scalper. Now, if you're a day trader, that's when you're using 15 minutes. For a scalper, you are using 5 minutes. Okay? For a day trader, you're using 15 minutes. For a scalper, you're using. If you're intraday, you're using 15 minutes, 30 minutes for your entry. So let's look at this now. This will have happened here. Let's look at it. Let's look at this. So here is a high. This is still higher than this. So there was no magic we're going to do. If this were to be higher than this, you're going to use this low. But it's still the same thing. That means here you're still going to mark. Here you're going to mark. You want the market. But at this point, look at what has happened. The market actually returned, sweep this liquidity. Now, this is what happened. You are not likely. You're not likely. Not likely. You're going to enter the market, right? You're going to enter the market as long as the market is below 50 moving average. I know that for sure, because that's what you will see here. At that point, you will see there's a small FEG here, all right, that seems to have been tested by these 2 candles. And for that, and you know this is this, and for that, this market, but it happens before breaking this. The market come back here. You are likely going to enter here and short. Probably if you are very pragmatic, if you are very proactive, you will have taken profits before the market take another drastic pullback. This pullback is going to intimidate you, very sure. Then you may not be bold enough to take another entry, and perhaps you will not be able to know what actually brought this market back here until you swim back to the time that is a higher time frame, or a time that's a bit higher than that 5 minutes. Okay, so if you are an intraday trader, right, a day trader today, you basically use 15 minutes for entry, and then you visualize your market properly on 4 hours. So on 5 minutes now, you will have been finding so much entry, okay? So much entry, as it were. So when the market return back here, so you could be stopped out here. Let's look at it. To be very, you're going to be stopped out here because the market has actually come back here. Look at it. This is a pullback. Look at the engulfing candle. Ladies and gentlemen, you are in here and you are out with loss here. For your stop loss, I'm not sure, but anyway, under ideal circumstances, you are entering here, your stop loss will be above the previous swing high. Maybe if you have that understanding, you may be fine. But if you're just looking at just a little above this, man, you're going to be stopped out. But that's not a bad deal. You are stopped out, no problem. So then if you are looking at it, 1:2 risk reward, you're pushing this way. Then the market again got as if it's going to back. This is another rejection, right? So look at it. So that means this is the place that you finally get a profit taken. The market again crosses above 50 moving average. So it's slow. It's a kind of little bit slow, kind of whatever market movement, but that's not it. So now market has come down to this point and begin to go sideways. Okay, it's begin to go sideways. So now before the moving average itself, you see that I've traded here. Now let me show you something. Now you are now working together with your MACD. So let's go. Let's spread it out so that we can see it properly. Okay, so here you go. See your MACD crossing. So at this cross, you want to find an entry. So it's going to delay me. So probably, all right. So these are the things that you need to know when you are using all of these indicators. You need to know when the market, if the market is not trending, both MACD and even moving average trend indicator may not give you what you wanted. So, but here, see the market, before you are actually deciding, somebody who is purely looking at the market structure, price action and market structure will have entered and taken some trade. All right, so see it here and all of that. But it only supports, right, your bias and all of that. See another one. This guy is so choppy all this while, and I don't know why I won't enter this trade. Okay, because let's take off the MACD. I don't know why I actually took this trade, because if you look at it on the higher time frame, let's look at 4 hours. You see how choppy it was. So you can see how choppy it was. So that means let's remove the moving average so that you can see properly. So because most time all those indicators block you to see the action that the price is performing, right? So you can see this had been ranging since the 1st of August, had been ranging from this key level to this key level, this key level to this key level, this key level to this key level, right? Another one. So that means it's finding its way again back up here. So it has actually not broke out of since August. Look at it. Nice. 4th of August, or no, 1st of August. Now here we're in September 2025. You can see the market is not. So sometimes this type of trade, unless you are a scalper to the core, you want to now sit down with it, buy low, sell high, buy low. So I do not have that luxury of time like that, to stay in the market that's choppy and all of that. So better you want to start filter into another instrument. Okay, I saw something. Let me go here. Okay, so let me go to Trade Locker where we have, if I see any opportunity, I can take a trade so that you see how it's been executed. All right, so let's go. Okay, so this is 1 minute. So look at it. So on 1 minute now, if you're a scalper, I talk about 5 minutes, 1 minute. So let's say crossover here. Look at your 50 moving average and all of that. There's already a crossover. That means you will have taken an entry. So but that means you are going to be very sharp. Okay. So taking an entry perhaps here. So this is 1 minute, right? So here, below 50 moving average, but there's no even massive engulfing candle. That's another problem. 1:2, you perhaps may not achieve it. So, but some scalpers, what they do, some scalpers, as they just entered, they monitor the trade. You know, it's 1 minute. They monitor the trade. So perhaps if you look at it, this is a low that you probably expect the market to come back to. So if that's the case, you're going to be doing this. Stop loss here. 1:2 risk reward. So that means you will have achieved that by the time this one drops, because it's as if it's going to drop. Look at an engulfing candle, massive engulfing candle. So, and your MACD too wanted to cross but failed. That means there's momentum is low. Okay. So there's momentum very high here when the crossover happened, and probably you want to be trading that. I want to check an instrument AUDJPY. I think I saw it selling or something. Okay, they printed the same thing or similar thing rather. So let's look at 4 hours. Okay, so it's a bullish market, right? It is. So this is a high, this is a low, this is a high, this is a low. So now another high to be taken off. But there's something now happening here. It's struggling at this high. If you step back, you could see some previous issues. Now let's go. Let's fix this. Sorry. So let me just put this here to have an idea. So that means liquidity, 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 all swept. Recent liquidity swept, right? But if it has happened that way, that means I need to know what's happening here right away so that to make my decision. Okay, so I go to 1 hour. So in 1 hour, seeing the market actually struggling here. But in 1 hour, the market is struggling here, but there are more like down close candle as weak than up. So it's fragile. That means we could get a breakout and retest and continuation if you short. So that's what need make you to continue to refine. Okay. So continue to refine. So let's go back to 5 minutes. Sideways. For me, I will avoid this type of trade. Okay. Though it may sell, okay, so but that's not a yardstick. Okay. So let's look at Bitcoin itself. Similar thing. So come down, buy. Okay. Okay, so let's look at SAU. Amazing. So you can see SAU now. If you have been trading SAU, this is 1 hour. So imagine even SAU on 1 hour. Look at the retest. Right? Look at it. This is a key level, SAU. This is a trend line, bounce of it, retested it. This is a very good cluster. Try this cluster, massive move. Massive, when I mean massive move. That's about 430 pips. Retest, 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 a break, retest the key level, and a retest the candlestick. The trend, the trend indicator. Look at it. Come down, scoop. Okay. Though this, if you have given to 5 minutes, you will have been fidgeting. All right. So it's very simple to achieve all of this. You can see in 5 minutes now. So, okay, you can see now it's dropping. So, is it going to get bounced again at this 50 moving average? We have it like kind of double bottom here. So, you see, if I wait for neckline to break, it's breaking and getting above 50 moving average. So, but one of the lovely side of this, if you're trading this, is to make sure that you focus on an instrument. You can look at it now, this all-time high, 3674. Maybe you want to travel there. It was very simple. I was thinking I was going to get a market for us to buy. Okay, so ladies and gentlemen, that's so simple on this Felix Parss strategy with indicator. Felix Parss strategy with indicator. Thank you. To have a nice time. To ensure you sign up with the link of Capitalxtend in the comment section, make sure you connect, subscribe, and share with friends, and of course, like the video so that we can post more videos. Thank you, and bye for now.